Hello and welcome to StreetsTalksTo, a brand new podcast for the financial services industry. My name is Julia Streets, and in this series I'll be interviewing CEOs from some of the most influential firms, industry bodies and initiatives. And as every CEO will testify, one of the critical factors of success lies in the strength of the team. So on each episode, we invite the leader to bring along one of their colleagues, and together we'll be looking at what's at the very forefront of innovation and change. We'll be thinking about the challenges and uncovering the opportunities that exist both today and as we look ahead, particularly as we all navigate these extraordinary times. So today I'm delighted to be joined by Paul Humphrey, CEO, and William Lederver, COO of BMLL Technologies. Now let me just tell you a bit about the company. BMLL is a financial data and analytics company serving the world's most sophisticated market participants. They help clients understand how markets behave by giving them access to granular order book data from exchanges and trading venues worldwide, and also the tools with which to analyse it. So with BMLL, traders, quants, researchers, business analysts and compliance staff have access to the analytics and the tools they need in order to unlock the predictive power embedded in historic pricing data. And ultimately, they could all make better trading decisions. Paul Humphrey is the CEO. He joined at the beginning of this year, January 2020. He is a seasoned board director and strategic advisor, and Paul brings extensive experience in market infrastructure, market data, fixed income, foreign exchange, derivatives and commodities. Prior to joining BMLL, Paul has enjoyed a prestigious career in many banks and financial institutions, even launching his own consultancy. And most recently, he served as interim CEO of Euronext London. He's been global head of fixed income, currencies and commodities at Euronext NV prior, and was chief executive officer of electronic broking and information at Tullett Prebble. And today, Paul brings his colleague, William Lederver. He is the COO of BMLL, and he joined in 2019 from the Boston Consulting Group, where he advised capital markets clients in the fields of technology, data, and the evolution of the regulatory landscape. Prior to BCG, William spent 4 years on the buy side in trading and operational roles, with a focus on equities and interest rate futures at Met Traders, Gartmore Investment Management, and Neptune Investment Management. So gentlemen, welcome. It's wonderful to have you on the show.
Thank you, Julia. It's lovely to be here.
Thanks, Julia. It's really great to be here.
So as you know, the objective of the show really is to start by looking at the world at large, thinking about the customers that you're serving, some of those I explained in your introduction, and really sort of what they're thinking about at the moment. So Paul, can I bring you in first of all? When you think about what keeps your clients awake at night at the moment, what are they particularly thinking about?
Well, we've seen tremendous surges in volumes and spreads widen with immense volatility, certainly in March. We've seen more aggressive trading behaviour in the market as firms are certainly looking for certainty of execution of their orders. In times of volatility such as this, having a clear picture of what is happening in the markets is key. As a result, we've seen increased demand, I'm pleased to say, for our data and analytics capabilities that help clients make more sense of these market moves and support their trading functions.
And William, you look at this very much from an operational point of view. When you're talking to your clients from that lens, what are the big things that they are talking to you about?
I mean, one of the things that our clients have always done is maintain enormous data warehouses on-premise and in-house, a lot of their technology. One of the things with working from home is all of that latency that's so dependent, that their trading is so dependent on, is no longer there because the decision makers are at home. Access to all of that granular data, the analytics, the systems that they need to operate at their best are all on-prem. And there's a dislocation between the decision makers and access to that data. And that's really where, just to pick up on what Paul said, that surge in demand that we've seen is because we're able to deliver that in a seamless cloud delivery mechanism.
Paul, looking at the buy side, thinking about the sell side, are we seeing changing behaviours?
Well, we're starting to see new patterns of behaviour. And certainly there actually seems to be a divergence, if you like, between the buy side and the sell side. The sell side seem to be operating in much more of a disaster recovery mode, split teams, working from the office, some of them even working from DR sites. And of course, when they're doing that, they're working with their existing infrastructure, so they're not really having to think about their screen real estate. On the other hand, the buy side seems to have moved home, and they seem to be able to operate far easier. Therefore, they're not going to be coming back necessarily anytime soon, certainly as fast as the sell side. Now, whereas the buy side has typically operated with maybe 4, 6 screens around them, now they could be working off a laptop or maybe a couple of screens. Therefore, screen real estate, which frankly was red hot to begin with, has now gone somewhat white hot. Getting your insights in front of your clients is more challenging than ever. And this is where we see data and analytics playing a real part in this, in getting your clients' attention.
And clearly getting readily integrated onto, as you say, ever smaller screens and be able to get that functionality to work right the way across all of your trading applications really matters as well. William, from a structural, from an operational point of view, is there anything that you're worried that people are putting key decisions on the back burner, that they're overlooking at the moment?
Yeah, so there's been a natural trend towards cloud adoption. What we've always said is that the cloud is immensely secure, not only for market data but also for proprietary data, providing it's architectured and infrastructured in the correct format. One of the things I think that this pandemic will accelerate is a kind of an adoption of the cloud, as people see it sort of a distributed working model and operating model coming to the fore. And by that I mean, imagine if you have, you're operating a dual team system, so red team, blue team, with 50% of the people in the office. So as Paul mentioned, you've got 50% of people on traditional 6 screens, 8 screens, and you've got the other half at home. How making sure that there's no there's no downtime, that there's no the data that both teams are seeing at the same time is the right one. So I think we'll see a kind of an accelerated adoption of certain cloud solutions. The kind of the flip side to that is, with all the volatility that's gone on in the marketplace, we've seen a very different approach to kind of run the bank and change the bank cost buckets. So non-regulatory change the bank, which is really the kind of interesting the capital expenditure elements of a bank's balance sheet, are going to be put on hold, simply because no new investments are going to be made. Right now, that means that people halfway through programs are going to end up running the risk of taking shortcuts. And so what they'll try and do is find a one solution fits all model, which may not actually work. And so what banks and clients need to be very conscious of is making the right decisions when it comes to that cloud adoption. Because when you're going through these kind of turbulent times, focus on cost is at the fore. And what you want to make sure is that you're not spending your money stupidly.
Paul, is there anything you'd add to that? I saw you nodding on our podcast platform. You were nodding along to that, but I wonder if you've anything to add.
Certainly, I think there's going to be a change in attitude, I think, to working from home. And dare I say, I think some of this is rather correlated to generations. Maybe perhaps the older generation, the older you are, the more you need to change. Take my generation, for example. One of the things we did to an industrial standard was turn up when we first started in the industry. We turned up no matter what. In many ways, perhaps on many an occasion, we'd have been more productive if in that time we'd have been able to work from home, but the technology wasn't there and didn't allow us to do so. So I think we've learned a ton. The other thing is financial services as a whole. We've been wildly behind other areas of industry. Zuckerberg announced 50% of the staff will return to the office. He will hire people from multiple locations, notably remote ones from where their offices are located, and has been quite open about the levels of pay that those roles might attract. I think in financial services, our thinking in terms of remote working and how we accommodate that in with the technology that we have around us today, I think there'll be a very different model when we go back, and the expression of hybrid seems to be coming up a lot, that I'm hearing when I'm talking to a lot of people.
And it's interesting because you're obviously, as you say, you're out in the industry, talking to the industry virtually, if not physically, all the time. And I'm now really keen to kind of pivot more towards BMLL, actually. And what are you doing to help clients through all of this? How are your products and services adapting? Well, what are your thoughts on that?
So I think if we think about the impact of remote working and the lead that the technology sector has had, especially over the financial services sector for the last sort of 10 years, really the war for talent has been lost by the banks. Top graduates coming out of the top universities have choice with companies like Google and Facebook and Twitter offering these sort of much more affordable packages. The pay is on a par. Google's 80/20 enables this kind of enormous creativity. And what you're going to find is as Facebook and Twitter are offering this ability to work from home and offering packages to support those who want to work from home more, our clients are going to end up having to compete for the same talent. What we've always been saying at BMLL is that the speed race is over and the data race is only just beginning. And when you start thinking about that, you realize you're no longer competing for a niche subset of technologists who always want to try and cut the processing time down. You're competing with every other analytics provider in the world for that talent. So data scientists can go and run, advertising data science for Facebook and make meaningful impact. So there's an increased war for talent. So banks and asset managers and traders and hedge funds are going to have to start finding non-financial incentives to recruit that talent. And people are looking out there that are broader, full benefit packages as a result.
Paul.
Yeah, I mean, I think about this. We call this, the democratisation, if you like, of financial services. A bit of a perfect storm that we're witnessing here. We're seeing, a pandemic accelerating the existing market trends towards the democratisation of these services. Over the past decade, we've seen this gradual breakdown of monolithic and siloed services across capital markets, and we've seen fintechs emerge to fulfill the technological requirements, or indeed gaps, many of these firms have to help. And this can be regulatory compliance. With the adoption of cloud and open source technologies, smaller, innovative, and highly specialist providers, such as us, can enter the stage to partner with the incumbents and help them. I think there's certainly a move away, and there has been for many years now, in terms of developing in-house. The ability to work with third-party providers is opening up a slew of conversations for us.
And it's interesting because BMLL is not a startup, but it most certainly is a fintech. Talk to us a bit about the corporate history. William, let me come to you first of all. How old is the organisation?
So BMLL was founded in 2014 as a spin-off from the Cambridge Signal Processing Labs. Since then, with the aim really of taking the research that our founder set out to achieve and understanding and creating a framework for analyzing granular limit order book data. And since then, we've basically been building on that initial foundation and have built a platform that collects data from 45 different exchanges globally, harmonizes them into a unique format that captures all of the information, but enables you to seamlessly transfer your analysis from different stocks to different venues without replicating your code base. And then on top of that, a layer of analytics libraries, open source and proprietary, that enable you to effectively shrink the size of that data set down, manipulate it more easily, and then on top of that, apply complex statistical methods to derive the insight. Now that's kind of the overarching platform, and that's that took a long time to build, and subsequently, the last 12 to 18 months, what we've done is built modular products on top of that enable us to not only deliver that access or that granular data and analytics to a broader set of market players, it also delivers not to across different use cases. So if you are a trader, and you care only about ingesting pure data, you don't want to do the research, we offer you a data feed. If you are a human who wants to look at visualizations or see the impact or see the insight in an impactful interactive visualization, we can do that too. And so that's where we are now. And we've got these three kind of distinct product lines.
So let's bring some of this to life then. So here we are at a time of change. You're out there talking to various players in the industry. Can you give us an example of the kinds of use cases that people are talking to you about?
Sure. So we've taken sample sets from particular venues, if you like, over and above the data that we already collect. As William said before, we collect level 3 data, which is the most complex data available from 45 different venues, frankly, in 45 different formats, and we pass that data into a usable library. We then take that data and we can analyze the performance of a venue. The type of performance that they can put out to their clients, indeed as hooks to get to their clients so that they notice the performance of their particular venue. Also, it can be provided to them in KPIs where they don't perform so well actually versus their competitors. So we agree with them a series of metrics that we monitor, and we send them through to them on a daily, weekly, timely basis so that they're able to improve upon the areas where they may be weak.
And that's really interesting because if I think now about, kind of with lockdown, presumably some people are looking at, William was saying earlier about, it's about going through a massive BCP transition. And in some areas, you've got to work really hard or even harder to kind of keep the lights on in a way. Now that people are moving back on track, what sort of things are they talking to you about? Why should listeners be coming to you and saying, actually, I think you can help us with something?
So one of the only ways that there's been a lot of talk around the predictive power of historic data. So if you are about to send a trade to an exchange on a particular stock, let's pick Vodafone, are you going to send it to the exchange that historically has had its price furthest away from the European best offer? Probably not. Or the one that has the greatest market impact measurable over time, or indeed the one that has the largest amount of failed trades. All of these insights really come from historic data, and they help demonstrate the performance of each venue. So if you're directing a trade towards those various exchanges, you're only in possession of that insight if you have indeed the type of analytics that we're talking about here.
The recent volatility with everything that's happened around COVID and the instability of the financial markets has created a number of interesting views that you can only see if you start to analyze the deepest granularity of the data. So what we've noticed on both sides of the pond with US and European data sets is what we call a move from a passive state to an aggressive state. So when we talk about passive state, orders that spend longer on the book before they're executed, the amount of size that's being done per day is smaller and spreads are tighter. Now, when markets are volatile, the natural evolution is that spreads widen. But what's been interesting about COVID is that the amount of time an order sits on the book has reduced dramatically. So we looked at average order resting times moved from 6 to 8 seconds when passive to fractions of a second and the size has increased 2x to 3x. And sometimes with the more volatile stocks, we've seen logarithmic changes in the value traded. So what does that mean? That means that you can start to get an idea of how the market as a whole is behaving by looking at the most granular telltale signs, like a tracker hunting down prey, that everything leaves footprints. And by looking at the most granular level of the order book, you can start to see these intentions and these footprints. You can understand, if you're a venue, where your market makers are positioning themselves and how that changes during stress times. Therefore, how are you going to compensate them to ensure that during those stress times, your venue has true liquidity? Rather than saying you've got liquidity, and the moment you try and put a sizable order through, you actually end up going through 4 or 5 price levels and getting a trade that's not in your client's interest. That's a really important decision. And those are the kind of analyses that we can do on our platform if you have the quant resource, or if you're interested in knowing that, you can come to us, you can tell us what you're looking for, and we deliver it for you in a data feed. So that historic view you can either use to make a decision or to prove why your venue or your algorithm or your execution desk is better than the others.
And of course, what everybody's looking for at the moment in terms of not only getting back into new working normals, are they coming through the lockdown, but also looking ahead and trying to gain an edge. It's the essence of the insights that they're going to give them that. But I talk about navigating the lockdown, and I'm really keen to hear you as business leaders about how you've been navigating the lockdown and what you've learned in the way as well. Well, let me come back to you on this question, because obviously the operational side of the business is where you focus for this. What have you learned on the way, Paul?
Well, we're a young company in scale-up mode. So clearly, we moved to new offices at the beginning of March. 10 days later, we moved our entire team home. So it wasn't particularly ideal. What we did learn was that we performed very well. We are a cloud native business. We didn't have a second of downtime for our clients, which I'm very, very proud of. The team themselves performed admirably. Now, having put ourselves in this environment along with everybody else, actually, the quality time we've been able to get with clients to talk over various mediums, our favorite being Zoom, has been it's been of high quality, I would say. We've had really quality interactions. And when you think of the time dedicated traveling to and from work, traveling to and from multiple meetings, leaving the office, it's been an eye opener to me just how much time we've been able to dedicate directly to the client. So that's been fantastic. Of course, the negative side of that is some clients have had to concentrate on business as usual. So unlike us, where we're a growing scale up company, if you are a large incumbent, business as usual is the first order of the day. Is everything working? Can the clients log in? And if it's all working, don't touch anything, don't break anything. Now that's hard enough. Doing that under these circumstances, times of extreme volume and volatility, makes it even harder again. So whilst we've had fantastic engagement with clients, getting them particularly to change or on board new data sets in our case or new technologies can be a little bit drawn out because they're just so frightened about breaking the underlying infrastructure. I have to say, I think we're coming out of that now. And I think we're starting to see the light. And dare I say, people have got used to the new normal. Growth is back on the table. People are talking about that. So I think we're all learning. I think we're learning as we're going along. I've learned that the resilience of our company has been amazing during this period. We've been nimble enough and agile enough to cope with that. It has some challenges, but on the whole, I think we've come through very well.
And I know that having spoken to you about this is that you're taking the kind of the conversation with your team, the communication, and then also the mental health of your team as they're going through changes as well, very, very seriously. I'm really keen at this point. This is what I ask all our guests: is kind of what have you been focused on as human beings, as Will and Paul, during this time to keep yourselves motivated, healthy, fit, interested, etc. Will, coming to you first of all. What have you focused on?
So I've always had a bit of a passion for wine, and I'm using my inability to go anywhere to actually start taking a much more academic approach to it. So reading a lot about the science behind growing wine, about the topology and the soil science around what makes wine wine, and at the same time drinking a fair amount of it.
It's a tough job, but someone has to do it. And Paul, how about you? Have you been reaching for the wine as well?
Certainly, I've been no stranger to wine during this time either. But I have to say, it's been a fantastic time without the travel into work to get fit. I'm as fit as a butcher's dog right now. It's been absolutely fantastic. So from that perspective, lockdown has been enjoyable. Certainly, we've had some nice weather, and I have enough space here to exercise. So I'm very fortunate in that respect.
It's right. It is incredibly important, isn't it? But now back to the serious matters in hand, because there's one other question I'm also asking all our guests, which is when we look at the swathe of regulation that is out there, is what is the particular sort of piece of regulation that you're looking at the moment that you particularly favour and you think this is something that people should be paying a lot more attention to? Paul, let me come to you first.
Well, I mean, certainly, I don't think it's on BMLL to impart our thoughts on regulation to the market per se. However, there has been a number of conversations going on about a consolidated tape. We've seen an excellent paper from Euronext on the subject. We've seen the World Federation of Exchanges opine on the subject, and they seem to be converging on the fact that they believe that a historic tape of record is the one that will give the market the greatest deal of insights that they seem to be pursuing. Now, that's marvelous because that's the tape that we've built. So if it were designated by the regulators that this would be the optimum route to go, then we feel that we're in a really good position for this. Does regulation need to change to make that happen? Not necessarily. Customers themselves, venues, banks, traders can decide that actually they want to adopt that historic record now, and therefore, we have that and it is available. So I'm certainly watching that with a keen eye. I don't think it's our position to influence the market one way or another, whether it should be mandated. However, should it be mandated, we feel that we're in a good spot. And even if it's not mandated and customers want to take advantage of the European best bid best offer as designated by the venues of what is the most optimum method of doing that, well, we've got it here today.
And Will, same question to you. Is what you're particularly looking at the moment? Obviously, I imagine you would chime with Paul. It would be very strange if you didn't. But from an operational point of view, what else are you thinking?
Wouldn't be the first time.
Well, I've never been accused of being a yes man before. I think from my point of view, what's really interesting is any kind of revision to the existing MiFID II framework in terms of venues, in terms of execution pools, anything that creates a dislocation to the status quo in terms of where people can come and find liquidity, what that price of that liquidity is, creates an opportunity for more insight to be driven. Right? Fragmentation in a certain sense is our friend. That's the core of why we exist. We exist to piece together the fragmentation of Europe, to compare the fragmentation across the pond. How do you compare performance of a venue in Europe with a venue in the US if you are thinking as an exchange to make that move horizontally? So anything that changes the status quo for us is very interesting. And I know that there's a lot of kind of talk, again, as Paul said, there's a lot of talk by people who have the right to opine. We are always happy to be a technology provider.
The regulator also he has to adjust to this environment. you can't designate that the only way you are regulatory compliant is therefore all piling into one office somewhere or into a lift bank to get to that office somewhere. So the regulator having to come up with ways where people are compliant when they're working from home, certainly for the banks, the buy side and whatever, there's going to be some interesting development and innovation as we go forward here in this new normal. Some would argue that Zoom and other such mediums are impersonal. I would argue the complete opposite. I've been in this industry for more years than I care to mention, having known people throughout my entire career. However, I've never been in their homes. I've never been in mine up until very recently. Via mediums such as this, I've seen clients of mine in them in all different surroundings. So I would say, actually, there is a benefit to this, and I do believe that hybrid way of working in the future will start to become the new normal, and we'll see some amazing productivity out of it. We'll see the ability to hire across a wider cross section of people in locations where we didn't think of that. We have one of our lead developers based in Edinburgh when I joined the firm. A man who leads over half my technology team. Well, he's as close to the office as I am now, and it doesn't make a jot of difference. So therefore, it does change your thinking in terms of the staff base and your hiring and your plans and everything going forward. So I'm quite excited by it. And I've always liked change. Throughout my career, I've always been an advocate of change. And from a strategic perspective, I've been asked to implement change. So I'm excited to see what comes next.
So, Will, Paul was mentioning earlier about new collateral, new website. So tell the listeners how they can find you.
Thought leadership is available on our website, bmltech.com. Go there, have a play, understand what we do and how we can solve your data and analytics problems with our products.
Great way to end the show, gentlemen. It's been a joy to have you both on. So to Paul and to William from BMLL, thank you.
Thank you, Julia.
Thank you, Julia.
This episode of Streets Talks 2 was produced by me, Kieran Yates, on behalf of Streets Consulting Limited. Streets Consulting is a business development, marketing, communications consultancy that's focused on helping fintechs from the smallest startup companies to some of the world's largest global organisations. Everybody's trying to innovate and everybody's trying to grow. You can find this episode on streetsconsulting.com and using the hashtag StreetsTalks2. We can be found on LinkedIn and on Twitter at StreetsConsult. Thanks for listening.